Good afternoon. In this video, we're going to go over this past week's trades and the weekly recap. Before I get into the recap, if you're not in the room, you can find the link in the description of the video and in my bio section of social media accounts. Also, please like the video, subscribe to the channel if you haven't done so already. You're probably going to hear the boy in the background playing, so I'm sorry about that. But I did finish the week with 13 wins and 1 loss for a win rate of 92.86%. So definitely pleased about that. Above 85% is the target. And yeah, I didn't trade that much. I mean, usually I'm trading so much more, but the plays just haven't been there. The past couple weeks or past couple months, the market's been choppy, just raging in one direction. There's just not been that many setups there. So I know I'm trading a lot more in the past, like 7-8 times a day, it seems like. And that's because we've had plays, but now we just don't have the plays. It's hard to play when it's going straight up, straight down, or just not going anywhere. So just gonna be patient and just wait for the right plays. You don't need to be in trades all the time. I just see people in the room all the time having to be in every trade and chasing every ticket. You don't need to do that. You're not going to get rich doing that. You're going to lose more money. More trades means more risk and more possibility of losing money. So less is better. With that said, I'm just going to jump into it. 22nd. Traded his room on the 22nd. I said SPY calls over 554. 22nd right here. It's going up 552. Wait, what? 554. Oh, that's up here off this high. Okay, so yeah, it broke that, and I took calls right when it broke. No, actually, I didn't. I waited for the first 2-minute candle to form. One of the plays this week, I didn't wait for the first 10 minutes. I just went for it. So it wasn't this day. Yeah. First 2-minute candle was green, broke high a day, ORB or open range breakout or slash breakdown. As soon as it broke high a day, I grabbed the 55.70 call at 620, and they went from 620 to 890. So that ended up being a good play. And then I took puts at 10 o'clock, which was right down here, right when it broke low a day at 552.30. I took the 55.25 puts at 680. And they went from 680 to 1090. So we got two good plays. And I didn't trade anything else the rest of the day. I wasn't sure what was going to happen. So, I mean, I know I missed quite a few plays, but I mean, it's kind of really hard to really play this because, I mean, you don't want to buy calls at high a day, because if you bought calls at high a day, it was a fake out. You wouldn't want to buy puts at high a day. So to me, I wasn't quite sure what it was going to do. So I was thinking maybe ranging. And so I was kind of looking at puts a little bit right here. But then we had this massive candle, and I wasn't chasing this candle. I broke high a day, ended up being a fake out, and then just flushed hard through VWAP. And to me, I didn't want to chase it. This candle was just too big and too crazy, and I didn't want to chase it. But if I did chase it, it would have worked out. But you don't know how it's going to play out in real time. In real time, you don't know what it's going to do, but when you look at the chart, when it's all said and done, you can see all the moves. And that people that do that don't really know what they're doing, because people that play off the chart after it's already developed is not a good trader, because they're saying, oh, you need to do this, you could have done this, you could have done it, you could have done all kinds of things, but you don't know in real time. At this point in time, that candle was too big, and it just felt too risky to play puts or even calls off that. So I just waited, and then it reversed right here, and I don't know. For some reason, I just didn't. I think I traded it my challenge account or something. I don't remember right here on this part, but yeah, I didn't touch that because of that candle. I mean, it reversed, and it was grinding up slow, and I didn't quite feel it, and then it just took off. So yeah, I missed some plays, but when you're playing, when you're looking at a chart that's already developed and seeing other moves, I mean, it's different looking after the fact than it is in real time. In real time, you got to go based off what's happening, how the market looks, how other tickers are looking, and to me, it just didn't. I wasn't feeling it. So whatever. So anyways, on the 23rd, what I think traded his room. SPY puts in the 554, which is right down here, this low. Let's see. He's making a lot of noise. Sorry about that. He's playing hard. There's a little playpen behind me. First 200 candle was green. I mean, I could have played ORB, but I was kind of looking at puts. Where were we in the hourly this day? 23rd. Yeah, inverted head and shoulders right here. But it broke. What day? The 23rd. I don't know why I didn't play that. I mean, I think I even saw it, but I think that I was more worried that it wasn't going to play out. I'm not quite sure why I didn't take that, but you can see the inverted head and shoulders. But then again, I might not have been looking at yeah, I think now that I remember, I was not looking at pre-market because the pre-market is showing the setup. If you're looking at, if you take pre-market out, it doesn't even show the inverted head and shoulders. So yeah. Anyways, I didn't take ORB. I waited until 10:48, which was my first trade. I took puts, which was right here. I took the 55.60 puts at 750. So I'm assuming I took them probably underneath this 55.55 area. So I took the 55.60 puts at 750, and they went from 750 to 950. So a little bit of a play, not too much. $2. $2 a play is good. I mean, you think about it. 10 cons, $2 is $2,000. The average person does not make $2,000 a day. Not even lawyers. Well, I mean, maybe lawyers probably make $2,000 a day. Really, really good ones, but yeah, I'm just looking. Then the next one was what calls at 123, which is right 123, right here, yeah. I didn't take high. See, the thing I worry about with high a day, I felt like it was going to range, so I didn't want to take high a day here because I was worried that it would just do what it did here. It would pop just enough to get you in, then slam on you. So that kind of made me hesitate a little bit about grabbing the calls right here. So I was thinking about them, but I didn't touch it. And then we get these little candles here, and I remember, I think I was looking at the bear flag right here. I'm much more wanting to grab calls over high day when you have a flag like this. But when you have 3 big green candles going into high day, to me, it just screams fake out or trap, and that's exactly what it did right here. So I was thinking the same thing. That's why I didn't take that. So, but when it was making these small candles right here in a flag formation, I was like, okay, if it gets over high a day, I'll take calls. But it didn't. We just had a massive flush. Then it made a bunch of small candles right here, and it's just making a nice consolidation where it was not going underneath lower day, but it was getting bought right around the 54.30 area. So I was like, okay, after seeing all these candles form, you get the body, the wick, the wick, the body. And I was like, okay, if it gets over this 555 area, it's going to go. So I took calls, 55.65 calls at 780 over 555, and they went to 1020. So 780 to 1020, another $2.60 move. Sorry, $2.40 move, like I said. 10 cons, that's 2,000 the first play, and 2,200 the second, so that's $4,200 in 2 plays. I mean, the average person is not making $4,200 a day. Let's see. Okay, 24th. Okay, I'm just looking at the next play. 24. We had this big drop down right here, going after hours into pre-market on the 24th, and I said SPY calls at over 550, which is right here. Now we gapped down from 554 to 548, so we gapped down almost $6. And I thought for sure that usually when you have big gap downs, people pile into puts, and then the market makers at open squeeze everybody out. So that's exactly what I was looking for. That's why I called calls after a big gap down. Sorry, hiccups. A big gap down is because of that particular reason, where everyone's going to pile into puts, and the market makers are going to ramp it up at open, squeeze everybody out, then they're going to slam it, or they're just going to rage it. So usually that's what ends up happening, one of those two things. And it actually gapped down and dropped more, which I was kind of surprised, because the market's been very trappy, and with this gap down, I thought for sure they were going to ramp it at open, or they were going to rage it all day, and they didn't. They just dumped it even more, and I was kind of surprised. But I took calls at 140, not 120, 119. I didn't do this. I didn't take puts. I probably should have. I felt like, I remember when I broke lower day, I probably had a little bit of regrets. But like I said, with a $6 gap down, to me, it felt like it was trappy. And you know, sometimes you get your instincts are not right. You get feelings and they're wrong. But you know, you're not always going to be right, and you're going to miss plays. I mean, so don't try to get too beat up if you miss a play. There's always plays, and there's always opportunities. So I wasn't going to chase this, and I was not going to try to call a bottom. I was waiting and waiting and waiting. But when I started to see it like flooring out or bottoming out at 544, and they flushed it, right? Well, they flushed it, but they made it look like it was going to bounce, and they took out the stops, and they turned it around. So I took calls right at 119, which is right here, right over the 544.70 area. I took the 54.70 calls at 720, and they went from 720 to 810, not quite a dollar move, and rejected the 20 EMA. But when it broke lower day at 132, wait, 132? Yeah, right here. Why did I grab it here? But I did grab the calls right here. Got a little bit of a play. Rejected the 20 EMA, but I grabbed the calls in this candle right here, 132. I should have grabbed it right here when it broke 544. Well, maybe that's why I did take it when it broke below 544, because yeah, that 544 is right there. So I think that's maybe what I did. I definitely should have waited more, but worked out. It took to 54.55 puts at 132, and I stopped out. What? I took the 54.55 puts at 710. And I stopped out, and it dropped more. And I took puts at 153. And he's whining. I'm gonna have to pause it for a second. Okay, he was just getting upset. The dump truck was on his keyboard. So yeah, I'm trying to figure out what the hell I did here. I bought the puts right here. I stopped out. Then I bought them again right here. So yeah, I bought them at 710, stopped out. Then when it came back to lower day, I bought the 54.55 puts again at 630, and they went from 630 to 1090. So yeah, I bought them at 710, stopped out at 4. Then I reloaded them again at 630, and they went to 1090. So yeah, I took a loss for nothing. Not quite sure why I stopped out so fast. I mean, I should have gave it a little more room. It didn't even get over the 20 EMA, and yeah, I don't know why I did that, but it is what it is. Then I took calls at end of the day at 321 right here, right down here. And I remember why I took this. I took this because there was massive open interest and volume in one of the strikes. I don't remember which one it was. So as soon as I saw them deep in the money or in the money, I grabbed calls based on they don't like paying puts, and so I grabbed the 54.40 calls at 490, and then from 490 to 940, just playing off the open interest, no levels or nothing. I just saw, I called it in the room that there was a massive open interest and volume on the puts that were in the money, and I played against them for the reason that they usually, well, they almost never pay the puts, but this week they did. This one of the days this week they paid the puts. Maybe it was this particular day. I don't remember, but no, it wasn't this particular day. Oh, maybe it was. Yeah, it was. But yeah, that's the reason why I did what I did with the calls end of the day. I probably kind of crazy to do that, but it is what it is. So yeah, I took one loss for the week, and that was this stupid play right here. I should have just waited a little longer and I would have played out, but it is what it is. So then on Thursday the 25th, SPY calls over 542.50, which is up here. We rounded up to this high. First too many candles red. Green candle, inside candle when it broke new lower day. I take it. I take the puts at the 53.85 puts at 580, and they went from 580 to 1510. So that was a 150% move on that play. All it takes is that one. All it takes is one play. That's all you need. It's one good play a day. You don't need 8 of them or 10 of them. You don't need to chase every ticker. Just one a day. Just take one good play a day, then call it a day, and just go enjoy that with your family or friends or whatever. And you don't need to sit behind the computer all day long. I know I do, but you can just take that one play, first half an hour, take the one play and just leave and go enjoy your day. That's all it takes. Then I didn't do anything. I didn't take high day right here, and this is what we just had a huge dump, and to me this seemed kind of sketchy buying high day. I was looking at it. I remember that I regretted not taking it after seeing it bursted through, but to me I felt like it was going to be another trap and it wasn't going to break, and it just went going, and we had an FU setup right here. I didn't take it, just wasn't sure, and got a flag right here. I could have taken that, and I wasn't sure. I just waited and I waited, and I finally took one at 2 o'clock, which was right here. This is just a random drop. I mean, anytime I play stuff like this where it's consolidating right here and it looks like it's topping out, and I play puts, it just rockets on me. So what I've been doing is kind of like waiting it out more. And he just threw his toy. I've been waiting it out. I've been waiting longer and trying to be more patient, and just randomly rocketed right here. Then I had a massive dump. I wasn't chasing the dump, but when we had a couple of consolidation candles right here, kind of an FU setup sort of, and when it broke below the 544 area, I grabbed the 53.85, the 54.50 puts at 690, and they went from 690 to 1360. So that ended up being a really good play. Then I took puts at 345, which is right here. So yeah, we got this big move right here. We caught this big move right here. Yeah, we missed some moves here, but we caught a big move here. That's all it takes. One big move and that's it. But we caught another one right here, and we caught this one right here. Popped up, went up to 20 EMA, well 200 EMA, and it rejected the 20 EMA. Had a big red candle, came back down. Once it broke below 541, I took puts to 54.25 puts at 530, and they went from 530 to 1020. So we had 3 massive plays, which would have made anyone's week, and so definitely a good play. Now I played a bunch of different tickers. Let's disconnect this one right here. First we played Meta, which was not that good of a play. Then we played Tesla. Okay, so let's see. Well, we won't even cover the pre-market trade, but traded Israel. So Friday, Meta 460 puts at 943 right here. Right when it broke, had this big green candle at open. Then right before open. Then at open we had this big red candle. So once it made new lower day on the ORB, open range breakdown, I took the puts. I took the 460 puts at 329, and it went from 329 to 385. So that ended up being a pretty good play. Then I took puts on Tesla 1006 right here, right when it broke 218, or maybe it was 217.60. The bodies of these two candles, you get a big red candle right here, two green candles a pop, kind of flagging a little bit. When I broke the two bodies of these candles right here, that's where I took puts. I took the 217.50 puts at $1.97, and they went to 325. So got a good play out of that. And I was looking at SMCI, but it didn't work out. So then I went back to SPY. I took SPY calls at 326, which is right here. Not quite sure why I grabbed it here. Not unless I went off the bodies of these candles, and I think I called 545 in the room, but I think I grabbed it early right here, right over 545.80. I grabbed the 54.65 calls at 750, and they went from 750 to 840. Good thing I grabbed it a little early and took it quickly because it ended up rejecting. So yeah, it was a pretty good day. Very good week. Just I missed a lot of plays, but I'm not going to lose sleep over missing some plays after a good week. I mean, only losing one trade for the week. So very, very good week. Considering a lot of noise, a lot going on, and it is what it is. Just remember what I said. You don't need to trade every ticker all the time. Just maybe, just focus on getting one good play in a day, and that's calling it. Because every play you take is going to be more risk and more of a chance of taking a loss. So you have one good play, then you get greedy and saying because greed is what hurts a lot of traders. Like I said, greed hurts a lot of traders because they go on Twitter and they see people making obscene amounts of money on trading, but they don't realize they probably didn't take the trade. They're paper trading. They're photoshopping their shit. There's just everyone. All the Farus on Twitter are bogus, and they're fake, and they only show their big winners, and they don't show all the other losses. I don't trust anybody on social media. They're all full of crap. And that's what hurts people, is that they have a good trade, they make a decent amount of money on a good play, and people get greedy, and they just are not satisfied making a couple grand on a play and calling it a day. They're trying to get rich. You're not going to get rich on a ticker or in a day. It's not going to happen. People want to get rich too fast. That's the problem with people these days. Traders, even outside of trading, people want to get rich fast. They don't want to work for anything, and people are just lazy, and they have unrealistic expectations in life, finances, or whatever. And you just got to dial it back and look what the average person makes, and ground yourself and look at it from like that. So if you're up a couple grand, don't try to risk it to make more. To try to make 10 grand a day, then the 2 grand you had, you're red on the day because you got greedy. Because people do that all the time. You got to stop looking at the money. Me, I don't trade for the money. I trade because I like the thrill. To me, it's the thrill. Yeah, the money's good too, but to me, it's more about the thrill. I love the thrill of it, and it's more of a thrill to me than anything, because it's like man versus machine, and to me, I like that. I like the excitement of knowing that you're going against AI. So to me, it's just exciting about stuff like that. But start trading with realistic expectations, because if you start trading with greed, you're gonna lose, and you're gonna lose everything. And don't be like that. Be smart. Start looking at what your neighbors make, and what your neighbors how they live and stuff like that. Kind of ground yourself and be respectful of what you are doing and what you're making and stuff like that. So I know I'm kind of ranting a little bit, but I really hate seeing people online posting making 50 grand a trade. That's full of shit. I don't believe it, because to make 50 grand a trade, you're going to have to put in a huge amount of capital in a trade, and that means huge amounts of risk. They're not showing you what they risk. They're not showing you how much they put into the trade to make the 50 grand. Yeah, maybe they made $1. Maybe they made $1 too, like anybody, like we do in the room. But they put, instead of buying 10 cons, they probably bought 300. And now, if you're wrong, just imagine how bad and devastating that'll be. You got to always look at the risk, not at the money. And people don't tell you when they're making, if they actually legitimately are, which I don't think they are at all. But I think it's all Photoshop bullshit. And more size means more risk, and don't get caught up in that. So yeah, I'm kind of ranting a little bit. Not ranting, but just kind of like making people realize that be realistic, you know, and be smart. So that's going to do it for the recap, and thanks for watching.